Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, the regulatory landscape, and capital markets. This segment is presented by Charles Schwab. I'm your host, Jill Malandrino, and joining us for this afternoon, we have Marshall Hayner, co-founder and CEO of Metallicus, as well as Peter Cutterman, former chief of policy for the state of Florida and blockchain policy expert. We're here to discuss the intersection of emerging crypto legislation, digital asset market evolution, and infrastructure readiness, and how institutions and regulators can align to unlock scale, trust, and long-term participation. It is great to have both of you with us. Welcome to Trade Talks. Peter, I want to kick it off with you because Florida, the digital asset initiatives there really did lay the groundwork for sandbox regulatory experimentation and just set the framework for how the nation is thinking about digital assets more holistically.
Yeah, thanks, Jill. Great to be with you and with Marshall at Nasdaq today. It's a pivotal moment for crypto, financial innovation. Let's be clear, the United States has finally turned the corner on crypto and blockchain policy. We heard all about it during the presidential elections. We've seen what states have done in their limited bounds to what they could do. But really, the credit here goes to President Donald Trump, who became the first to sign some meaningful digital asset legislation into law with the Genius Act. But obviously, this goes far beyond the headlines. This is about restoring trust in the markets, and the blockchain is going to be able to do that. Today, as people grapple with the idea of trusting banks and media and government more than ever, the blockchain kind of flips the script. This isn't about crypto legitimacy. This is about American competitiveness. It's really a tale of two tapes. And if the U.S. doesn't lead on blockchain, China will with their programmable currency and zero privacy. Florida obviously got into the mix with that on the sandbox. You've seen Texas do it with a crypto reserve. And you've seen some other states also get into the sandbox effort to try and build up crypto and blockchain technologies. This is massively important for America's sovereignty.
Yeah, it certainly is. And Marshall, it's great to see you and always get insight from Metallicus because your infrastructure, it's purpose-built for regulated financial applications. So when you're designing blockchain and the rails for stablecoins and KYC and AML and just a regulated DeFi ecosystem, how crucial was this to getting this legislation in motion?
Yeah, I would say it was very crucial. You can see the explosion of interest in digital assets from financial services, credit unions, banks, traditional finance is now entering the space. And there was a lot of interest over the past, I would say even decade, but the past few years have been leading up to this moment. And blockchain technology really is the closing the gap between financial technology companies, fintechs, and traditional financial services banks. But the issue that was missing was the clarity. So the Genius Act, the Clarity Act, that gave basically the green light for banks and institutions to enter blockchain. Now, does that mean that we should innovate not in a responsible manner, or should we mirror the existing systems and make them better and improve them, right? If I were to send a bank wire, if it's past business hours, if it's past 5 o'clock, it doesn't go through. If it's on the weekend, it doesn't go through. But now we're global. Now we're interoperable. We're 24/7. For example, the Bitcoin blockchain, it's famous for not really going down. It's always online. And that's really what blockchain networks do. They give uncensorable trust on an unalterable ledger that's global, it's instant, it's 24/7. But now we have this clarity that we can integrate these technologies with modern financial services. And we had to prove in our industry that we could actually do that we could put anti-money laundering technology into the blockchain, that we could put identity on the blockchain. And at Metallicus, we really built our entire stack around that. We bet on that, and it really has paid off. I think that over the next few years, you're going to see this technology inside banks, inside traditional financial services, and you may not even know that you're using it, but you will definitely have a much more efficient, much better experience when you don't have to wait.
Yeah, Marshall, there's one thing I want to add to that, though, because we hear about all the opportunities and accessibility that blockchain technology affords, not just Americans, but people around the world. But we don't hear that much about compliance by design. And I think that's what's missing from legacy crypto platforms. Perhaps they weren't built with cybersecurity or compliance first. And that can potentially lead to issues down the road. So how do you think the industry is going to address that? And now that we have guardrails, or we understand what the guardrails in place are going to look like, how do you think that's going to impact legacy crypto platforms? And how do you think that's going to help the ecosystem to evolve going forward?
Well, I think that it wasn't considered sexy a few years ago. If you look at the advent of cryptocurrency in 2009, when Bitcoin was introduced, there was kind of an ethos that this technology will do away with the banks. And that was really the wrong ethos. I remember discovering Bitcoin in 2009 and thinking, this is going to change everything. If you look at kind of like media, flashback 30 years ago, 20 years ago, 25 years ago, we used to go to Blockbuster and rent a video, right? Now we go on Netflix, we have streaming. Was it the death of media when streaming came about? That's really the same thing for blockchain and banking. So now we have the crypto firms and those in blockchain tech, they have to catch up and integrate these technologies. At Metallicus, we saw this coming. So we have spent the past decade building this tech and integrating it into our software. But, one of the things that I think crypto firms are very good at is being versatile, adapting. At my company, when somebody celebrates their 1 year, their 2 year, I add a 0 to it because I say 1 day in crypto is 10 days in the real world. So the crypto founders, they're used to this. They're used to having to adapt quickly. I think there might be some pushback because they're nervous about data breaches. They're nervous about this stuff. But in reality, it's going to make a better system. When we can use digital identity in a way that doesn't expose your private identifying information and you can cryptographically sign for it. Right now, you have your social security number. You enter that into every financial services app to verify who you are. But in the future, you shouldn't have to enter that. That's the equivalent of your crypto private key. You shouldn't be giving that out. You should have a public facing key, like you're at Jill and I'm at Marshall, and they request my information and I cryptographically sign it. And that's the public private key cryptography that crypto is famous for.
Yeah, and this is a perfect segue for the question I have for you, Peter, because I think the public sector scalability that's afforded by leveraging the agility that the private sector and these innovative companies have the ability to deliver, I think that's going to be key in supporting the compliant growth across this ecosystem as it evolves.
Yeah, you need states that are going to try this stuff out, right? Like the idea that there's somebody who has welfare or veteran assistance needs, and there's not a system that can transparently show where those payments are being made, the qualifications that it takes for those systems to be made. That's a major lacking system in all of government, state all the way up to federal. If we were able to start to implement a lot of these technologies into our states and into the federal government, we'd be able to cut out a lot of jobs that are pushing buttons and also utilizing the AI, move those jobs to people that are into high skilled machinery or things like that versus just clicking the button to make sure that the right person is being paid.
Yeah, well, I mean, especially for taxpayers, all three of us are certainly paying into the government, but understanding and being able to audit and trace where these funds are going. We hear billions of dollars going into infrastructure projects, and we have a lot of issues. So we're all wondering, where is this money going? How is it being allocated? So if this can provide that auditability and transparency, not just within the financial services ecosystem, but the underlying technology overall, I think it is something that's necessary at this point. But I also want to talk about the importance of state and federal coordination, because one of the challenges is, we'll use financial services as an example, is you're operating under multiple jurisdictions and multiple agencies. Do you think that you'll be able to get that state and federal coordination in practically and realistically thinking about how to build this framework out?
That's why the Genius Act, I'm sorry, guys, is so genius, is because it set up the parameters in which people can act and operate, right? And so states now, for the past few years, have been like, what am I supposed to do with the crypto sphere? What am I supposed to do with the blockchain sphere? It's no longer that. We have the framework. We know which way we're going to go. We know that the US dollar has to be backed in reserve for all of the stable coins. Massive, massive movement toward what the future of crypto is going to look like for the entire globe. And so as you're comparing the things between the US dollar being backed by a stable coin with the dollar in reserve and folks all across the world using that, totally different tale than what you're seeing in places like China, where they're utilizing their CBDCs to create a ecosystem that has to fall in line with what their crypto is saying you need to be doing. And these are things that we're talking about, like artificial inflation, spending, and something as simple as like crossing the road and being charged against your credit account for things like that. If the entire globe goes in that direction versus the US dollar, I think we're going to be in trouble.
Yeah, well, I also think you could argue that it's a national security issue as well, right? When you're thinking about how our adversaries are employing this type of technology, I just think this helps to reinforce our leadership, not just within the global capital markets, but as true leaders in innovation and for national security. At the end of the day, it's a very different environment than it was when we first understood what Bitcoin was about.
Yeah. No, I mean, I couldn't agree more. I'd love to hear what Marshall thinks about it, but I'm totally with you on that.
Yeah. So let's talk about this a bit more, Marshall. Realistically, how long do you think that this could take to implement once we understand what the guardrails are, legislation is assigned into effect and so forth? Is it something that will take 1 year, 3 years, 5 years? I mean, the infrastructure does have to be built out. So there is some patience that will have to be exercised here. So realistically, what does this time frame look like? And the second question to that is, at the end of the day, the end user, myself, we just want it to be able to look and feel natural and what we're used to using. So user experience is something to consider as well.
Absolutely. When we were building the MetalPay app at Metallicus, that was a lot of the consideration. We have technology that's for kind of the power user, but also we recognize that this technology needs to be made simple, it needs to be made easy to use, and furthermore, it needs to be ready for prime time. So, I got into crypto in the very early days when it was very difficult to use. It was kind of a hobbyist type thing. And now we're in 2025. If you lose your password, you can reset it with a bank. But if you lose your crypto private key, you can't. So we built the technology that you can recover your information, that you're safe on the blockchain. And the bank, for example, or the credit union or the financial institution can monitor these transactions real time. They can know where money is coming from and going to. They can freeze it. But at the same time, you have interoperability with other public networks like Bitcoin, Ethereum. And so you have the greater crypto landscape and ecosystem. But most people just want to use this technology. They want to be able to invest and buy digital assets. They want to, put their money to work. We're used to having maybe like a checking account where we could earn up to 4 to 5% that comes through treasury bond yields and other things like that. But then you have what they call DeFi, decentralized finance, that may be earning some higher yields, but it has to be done responsibly, right? We've seen how it works when it's not done responsibly. And so Metallicus, when we were building this tech, we really put that the responsibility in our innovation, the way we built it, we were very thoughtful because we're building for banks, we're building for credit unions. So I think it will take, every time I look at it, I say, we're only a few years away, something happens, and then you cut that into like a quarter or a half, because it really is kind of like Moore's law, where it just keeps exponentially speeding up in terms of the innovation. I used to say, it'll be a few years before every bank is coming online. I would say probably within a year at this point, within a year, 2 years, but really within the year. And, every day something comes out where I think it's going to move a lot faster. To the point you mentioned earlier, I also see this technology proliferating the US dollar, having more investment in US treasuries, and the US financial system. The US dollar is the denominator in crypto as the stable coin that most people use. And when it comes to trade finance internationally, that is also the same fiat currency that most industries and businesses use as well. So I see not only the opportunity for enterprise, but also for government. If you can imagine in the future, a treasury and this idea of decentralized autonomous organization. This was an idea that was created in crypto, that people could have transparency in the spending of funds and how they're utilized. But imagine if we could use that in government. We used to kind of, and we still do to this day, rely on our politicians to enact the will of the ideas that we have. So they go out to Washington, they go to DC, and we vote for them and they do these things. But what if they could put all of these ideas on the blockchain real time? What if we could have the spending real time, the accountability real time? It's not just for the private industry, but it's also for government as well.
Yeah, that was the point that we had made earlier, being able to audit where these dollars are going so that we can see through our own eyes what the ROI is and how effective that spending is. I would also argue, Peter, from an economic perspective, if with stable coins and us opening up this digital asset ecosystem, it just invites investment into U.S. treasuries, to Marshall's points, where people around the world are able to access them in a more efficient way, or just access them in general, and then also invest into other companies, within the public markets, even private markets, as things become on chain and tokenized. So there's an argument for the U.S. economy and the investment from international investors coming into the U.S. with a more efficient and accessible way to get to our markets.
Yeah, Jill, I couldn't agree more. I mean, it's just a totally different take than what some of these other countries are doing when they're creating CBDCs. Like, the fact is, the president got a bunch of smart people in a room. He talked through the issues on it, and then he was able to create a policy that says, no, this needs to be done through the private side, and then allow for investment globally into the US dollar. We're going to have more influx into the US dollar than ever before based on just this simple thing. And then as we start to implement that into places like government, you're going to start to see efficiencies that have never been thought through, because at the end of the day, in the future, every single thing that we do on a day-to-day basis is going to be tokenized. It's your social security number, as Marshall was talking about. Currently, everybody has a social security number. Every single person is going to have a token. These are things like opening up the gym, walking into a building, getting paid a certain amount of money. All of these things are going to get sent. Of course, we're going to have some privacy issues on that. Right. We're going to have to obviously solve some privacy issues on that. But the future, make no doubt about it, I know that I will be right in 20 years. Every single thing will be tokenized.
Yeah. And I think if you go into it with that privacy, governance, cyber first mentality as these ecosystems are being built out, I think that's really the key there. And I appreciate you bringing that up, and I appreciate both of your insights. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill.
Thank you, Jill.
Got it.